excited, particularly after the debate last night, if you can call it that, to get into what we think tax reform and financial services will look like under either a Biden presidency or another Trump presidency, what to expect to see over the next several weeks, what to expect to see in the aftermath of the election as well. And we're excited to kick off our series of events that we're doing here at Edelman to help our colleagues and our clients prepare for the election, to prepare for the aftermath of the election on a number of different issues. And the first one I think is very appropriate because it was certainly a big topic of conversation last night, and that is tax reform, financial services, how those types of issues are going to be affected by the election and by either candidate. With us today, we're very excited to have some special guests that we very much appreciate you all joining us here today. We have Victoria Guide from Politico. We have David Hirschman, President of the U.S. Chamber of Commerce Center for Capital Markets. Paul Thornell, Principal at Melman, formerly Managing Director of Federal Government Affairs for Citigroup. And of course, our own Ashley Lewis, who is a Vice President in our DC Financial Services team, to moderate the discussion. So thank you again. I'm Aaron McClear. I'm the U.S. Chair of Public Affairs at Edelman. We have a lot of great events that we're going to present over the next few weeks. We have a lot of points of view and offerings to help you all get through the next several weeks in the aftermath of the election. So very excited to share all of that with you, and very excited today to have this esteemed panel and our own Ashley Lewis to kick off our event series. So with that, Ashley, I'll hand it over to you.
Great. Thank you, Aaron, for putting this together. And again, thank you to Victoria, Paul, and David for taking time out of you guys' busy schedule to be a part of this. You all are near and dear friends and colleagues to the Edelman DC team. So thanks again for doing this. So let's just jump right into it. We obviously saw the debate last night, if you want to call it a debate. And we've obviously seen the stories by the New York Times this week covering President Trump's tax returns. Does this, I'm going to start with you, David. Does this ignite public sentiment for a potential Biden administration to prioritize tax reform and specifically corporate tax reform?
So I'm the Chamber's capital markets guy, and so I try not to play. I'm not a tax lobbyist, right, or I try not to play one on Zoom either. But we have looked at and I do think one of the, you have to look at this both from a rates perspective and undoing some of the Trump tax cuts. But I think if you just look at rates, you're in some ways looking at just the price of admission on what could happen on tax. And you really have to look at where the money is to pay for a number of the proposals. I think if you're taking odds on whether comprehensive tax reform would happen or whether tax would be a pay for other larger spending priorities, particularly coming out of the crisis, hopefully coming out of the crisis, you'd have to bet on the latter scenario as more likely. And that opens the door to financial transactions taxes or changes on capital gains or certainly efforts to go after wealth taxes. And those are the areas that the Biden team has been most specific on.
Okay. Paul or Victoria, did you want to chime in there? Or no?
Yeah, I guess what I would say is, first of all, Ashley, thank you for having us on and of course, your great work. I guess what I would say is it certainly would not be the first time that policymakers tried to legislate by anecdote, right? Meaning some headline occurs, something that has some close alignment with a either perceived flaw in some policy or regulation, and then there's energy to do something about it. That's what elected officials are there for and what they do. Right. I think the reality, though, is if Biden wins, whether it's COVID work, whether it's a list of things in the first 100 days he's already talked about doing, whether it's some very, I think, constituency-specific issues, policing reform, voting rights, immigration, whatever. I think there are a list of things that absolutely will be priorities for him. I don't see him waking up on January 20th thinking, oh, this is amazing. I'm so thankful to be here. Now I can finally do that corporate reform that I've been dreaming about my whole public life. And so I see this as a potential area of activity, but in the context of a pay for either as it relates to COVID stimulus, a range of other issues that certainly will have a price tag attached to them, such as infrastructure. But by itself, I certainly don't think Vice President Biden has been itching to, adjust the corporate rate just as an intellectual exercise. And I think, quite frankly, that generally when Democrats come to the tax reform conversation, they're coming at it sort of from the individual side of things, as opposed to the sort of corporate rate.
Right.
And to the degree that there's an ability to raise certain funds, David mentioned financial transaction tax. I absolutely think that type of thing, and certainly raising the rate back to somewhere in the neighborhood of 28% would be viewed as opportunities to generate revenue to do other things that are priorities for Biden and his administration if he wins.
Okay. And then, Paul, you touched on it a bit, but Victoria, I'll bring you into this. What should we expect, again, first 100 days or executive orders in a second Trump administration or potential Biden administration? Obviously, Paul, you touched on COVID-19 being something that should be addressed immediately. But Victoria, from a perspective of a reporter, like, what do you see kind of being the look ahead for either or situation?
Yeah, so I mean, coronavirus economic relief is presumably going to be at the top of the agenda. There's sort of a strange parallel if Joe Biden were to win. Barack Obama also came in the middle of sort of a calamitous recession, although this is obviously very different in nature. And the first thing that they did was, a stimulus package. Obviously, a lot will depend on what the economy does between now and then in terms of, how much urgency there is for a package and what that package might look like, depending on whether we're able to get any kind of aid for state and local governments. Things could start to look pretty dire for them by early next year. So I think that will be top of mind. I also agree with what David and Paul said about taxes potentially being a pay for. And, I don't know that there will necessarily be as much pressure to quote unquote pay for stimulus, because if you're a believer in Keynesian economics, part of the point of stimulus is that you're supposed to do deficit spending, and that's how you stimulate the economy. But on some of the broader agenda questions, I think that Biden would probably look for an opportunity to reverse some of those top line tax numbers. So he's talked about raising taxes for people above $400,000 a year, or raising the corporate tax rate. And he's talked about that as, a day one thing, which, he probably can't do that day one, but he probably look for an opportunity to do that early on, because that's like an easy thing to point to say, I'm reversing what President Trump did, since that's so much of what Joe Biden is running on is, that they believe that a lot of what the president has done is damaging to the economy. So that's what I would expect from Joe Biden.
Sure. Great. So looking at with a second term of a Trump administration or a potential Biden administration comes new political appointments to key financial regulator agencies. And we all know in DC that your personnel is your policies. Looking at both potential situations, will Trump keep his current roster of appointees, particularly at your cabinet level agencies, say the Treasury or the Federal Reserve? And then looking at your alphabet soup of regulators, OCC, FDIC, and CUA. And then with that, looking at a potential Biden administration, what are some key names that are, reverberating in this town that we may see in a potential Biden administration? And Paul, I'll kick that over to you.
Well, let's see. I think on the Trump side, I think he made some sort of offhand comment, as he often does, saying he might ask his whole cabinet to resign and then bring some people back in. I think he said that maybe 3 or 4 weeks ago. I believe, though, that Secretary Mnuchin said he would like to stay on. Fundamentally, I have no sense for it, I think, but you based on those two comments, my guess is you'll probably see, maybe in some cases, some musical chairs. You might see some folks move from one role to the other. Some regulators have some expiring we'll have to deal with. So that's not a whole lot of insight, but just observing the unknown. And I think it's reflective of the fact that, generally speaking, Trump hasn't talked much about what he wants to do in the second term. I mean, we really don't know. People or policy. He talks in broad strokes, but there's no campaign website. There's no platform, Republican platform this year. It was just carried over from last time, and that's not a criticism. It's just calling out a reality. You know, as it relates to Biden, I think we've already seen sort of first sort of threshold. I think element of this is that there's clearly going to be a balance between those who represent sort of more far left-leaning policymakers and more sort of mainstream moderate types. And look, I think there's no doubt, but there may be a sort of very significant in the family fight that occurs. Some on the far left have urged Biden to pledge to not appoint any appointees with background either in Wall Street, health insurance, fossil fuels, private prisons. A number of groups sent him letters some months ago on that. And there's an even further call that's being pushed to not appoint anyone who's been an officer in a company. And you know, I've taken issue with this. I did an op-ed in Barron's about a month or so ago that focused attention on the problem this triggers when it comes to having a diverse pool of applicants, racially and ethnically diverse. Chris Brummer, Georgetown professor, did great research to show that in the history of the federal financial regulators, there have been something like only 10 out of 170 have been African Americans. And when you look at even previous administrations, look, I'm as partisan a Democrat as they come, but in Obama's administration, there were few, if any, African Americans and Latinos in senior roles on the economic policy team. So whether that's NEC, Treasury, CEA, the alphabet soup you reference of regulators, there just is not a bench. And so if you have a blanket exclusion, as some would like, and limit anyone from finance, broadly speaking, you're going to have a real tough time. And believe me, I'm not making a comment as Charlie Scharf, Wells Fargo CEO, did last week. So please don't anyone suggest that. My point is just, we need the top minds and people with expertise and experience and insight and stature when you're talking about roles of Treasury. And we need as many diverse candidates in the mix to tackle the problems of race, economy, equity, and power. And Vice President Biden would be very appropriate if he were to dismiss those calls to limit the candidates with a corporate background. I would imagine that when you get to the positions like Treasury Department, Treasury Secretary, you're going to have someone who is more in line with a sort of establishment wing of the party. I'm not going to say moderate at all, but I would certainly bet that you'd see a Lael Brainerd, who would certainly be a history-making appointee in that role as the first woman as Treasury Secretary, and she absolutely stands on her own credentials as someone, given her experience and role currently on the Fed Board of Governors. And that you might look to other places like Chair of SEC as a place where you might have some who may be associated more in the far left, I hate to use these vernacular terms, but just to be direct. And perhaps CEA, Heather Boucher, someone who's advised Biden's campaign and the economic role in that world, perhaps there. But I think there will be, if he wins, there will certainly be an ongoing conversation, and this doesn't stop with the first round of nominations and confirmations between the sort of wings of the party. That they've got a number of progressives on the Hill who, although outnumbered by moderates, moderates are not loud, and progressives have the bullhorn. So I think we'll have to see how that plays out, should it be Biden.
Yeah. Victoria, David, any names come to mind that you guys are thinking about or folks are talking about?
Yeah, well, so an interesting dynamic that I think not a lot of people are aware of is that in October 2021, Randy Quarles' term as vice chairman of supervision, so the regulatory chief at the Fed, his term for that ends. He's not his term at the board, but if he chooses not to stay, either Trump might not reappoint him, or he might just decide that his work is done because he had sort of several years of tweaking, paring back some of the things that were done after Dodd-Frank, and he might just decide that he's done and ready to leave. So I think that it will be really interesting if he leaves to see who President Trump replaces him with, because the types of appointees that the president appointed to the Fed at the beginning, which started with Quarles, were very different from some of the nominees that we've seen later, who many of which haven't been able to make it through the Senate. Like
Right.
Steve Moore, or more recently Judy Shelton, who's still a question mark.
Right.
But it'll be interesting to see how he sort of rides that line in terms of somebody who's acceptable to the Senate. Somebody who's going to presumably continue in the sort of more deregulatory bent of Randall Quarles. So I think that's really interesting. The Treasury Secretary, Vice Chairman of Supervision, Fed Chair question are all sort of intertwined, even though the Treasury Secretary is a decision that's going to have to be made at the beginning under President Biden. I agree with Paul that it seems like Lael Brainerd is sort of the front runner for that, although there are some other people that are presumably interested in the job. For example, like Sarah Bloom Raskin, who also has a Fed and Treasury hybrid background. There's an endless list of rumored names of people that are
you can go on and on and on. Yeah.
But I think that's going to be an interesting trio, because if Brainerd is not the Treasury Secretary, then that plays into the equation of whether or not Jay Powell gets reappointed. And his term is not up until the beginning of 2022, but that will also probably be a decision that's made late next year. So all of these things are sort of going to be in the conversation already. In terms of FDIC, I think that's really interesting too, because so the FDIC board includes the comptroller of the currency, who will be able to be replaced if Biden's elected, and the CFPB director, who will be able to be replaced thanks to the Supreme Court. And so one big question is, if Biden wins, does Yellen McWilliams stay when she's basically outnumbered by Democrats on
I think okay, there we go. Okay, great. And then kind of moving over to Congress and the House of Representatives and the Senate. It's expected Democrats will likely maintain the majority in the House, and it's a toss-up in the Senate. Do we expect a Senate to be more active given potential changes in chairmanship? So looking at the Senate Banking Committee, I'm a proud alum of, there could be a potential shift given if Republicans maintain the majority, Senator Pat Toomey chairmanship, or if Democrats gain the majority chairmanship under Senator Brown. What are you guys looking out of Congress if those changes do happen, or when? And Victoria, if you want to chime in, or David.
Yeah, so it would presumably either be Pat Toomey or Sherrod Brown, which you know better than anyone would be vastly different outcomes. Although they'll presumably be working together. I mean, in theory, either way, one of them will be the ranking member and one of them will be the chair. If Pat Toomey is the chairman, that will have all sorts of interesting implications for the types of legislation that are pursued. He, for example, has talked about, the Fed has an emergency program lending to state and local governments, and he's talked about how, we could wind that down.
Right.
So I think that if you have a Senate that's controlled by Republicans, you could see, much more pressure on the Fed to sort of wind down some of the support that they've been doing, which will have a different economic outcome. He's also just sort of more ideologically conservative and not wanting the Fed to play an outsized role in the economy. And so there might be more pressure on the Fed to, have some sort of exit strategy in at least rhetorically, right? Like the Fed has basically said they're not going to raise rates for years, but there could be more pressure in general on them to think in those terms than they would otherwise. On the Sherrod Brown side, he's focused a lot on racial equity. and housing in particular. Ashley, you should you should really be talking about this section because you know better than I do. But I think that those sorts of things will really be front and center if he's chair.
And just a quick reminder to our audience, please submit questions. We will be taking a Q&A portion from our audience here later in the Q&A section. David or Paul, did you want to chime in on anything Senate related?
So maybe just some base assumptions here, right? If the White House flips and the Senate remains Republican, we view that as a period of significant continued legislative gridlock, even with nominations. And therefore, the regulatory arena becomes a much more aggressive, particularly on the enforcement side. And the White House will try to use other tools it has, including government procurement, to drive some of the policy changes they've proposed. If, however, the Senate also flips, one of the lessons both parties have learned is that the periods where you have unified government are fleeting, and therefore you have to pursue a maximalist agenda during those periods. And so you would see, I think, both efforts to repeal through the Congressional Review Act any regulations that this administration adopted post-May, which could include things like Volcker, some of the recent changes at the SEC around corporate governance and a whole number of other things. But then you have to look at where has the Biden administration, potential Biden administration, the Biden campaign, really focused its attention. And what struck me is we're tracking 314 different business-related policy priorities that they've outlined. 28 on infrastructure, 41 on immigration, 77 on climate and green energy, 27 on Made in America issues, at least 24 on racial equity. The financial services pieces are part of racial equity, but there's no long list of financial services reforms that they proposed. They really fall into the create a government administered bank with a combination of the post office and the Fed, maybe creating a new credit reporting bureau within the CFPB, but it's not as expansive a list as in those other areas. So that gives you a guide of what the legislative agenda might be. Stimulus, infrastructure, some versions of the PRO Act, the labor proposals that were in HR 1 this time. Those things might move more quickly than there won't be a Dodd-Frank necessarily of post this crisis.
Yeah.
I might add just a final point on the Senate. There's virtually no scenario where Sherrod Brown will be chair of the banking committee and Trump will be president. So presumably, whether if he's chair, then it's with a Biden as president. Generally speaking, I don't see the Senate flipping and Biden not being president. Anyway, so but I think either way, you're going to see the most active Senate banking committee you've seen since Dodd-Frank passed. 10 years ago. And either Brown or Toomey, Brown has been the top Democrat on the committee for 5+ years. So we kind of have an idea just based on what he's talked about, what he's associated himself with in terms of policy priorities. We don't know that much about Senator Toomey. We know that his background, professional background, he has experience in capital markets work, which gives him certainly I think an appetite and a sophistication to engage on these issues. He has shown he has bipartisan interest in engaging. Various Democrats in the Senate have gotten together on different issues, whether it's something like working with Chris Van Hollen on securities issues or other things. So I think either way, you're going to see a pretty active, and look, it's a low bar. I mean, there was one markup every year and a half in the banking committee. And just flipping the House real quick, clearly Maxine Waters will continue to be chair. She will not ease up at all. I think when you look at the subcommittee chairs on the Democratic side, there will be a bit of a dominoes effect because a couple of those subcommittee chairs, Greg Meeks and Brad Sherman, are pursuing the chairman of the Foreign Relations Committee in the House, and whoever wins that is going to have to give up their subcommittee chair. Lacey Clay, who was the Housing Subcommittee chair in the House, lost in a primary election, so he will be out. So that'll have some knock-on effects, and I think we'll probably we will see some new names on the committee ascend to a position of leadership. And you'll see, I imagine you'll see folks, whether it's like an Ed Perlmutter or a Bill Foster or a Katie Porter or Ayanna Presley, perhaps Al Green will take a different role. We will see some shuffling there, and that obviously impacts the disposition of the committee. So I think either way, you're going to see a pretty active, not just legislative side, but also the degree to which, if it is still a Trump administration active oversight on the House side, if it's a Biden administration, a pretty robust agenda related to things on the consumer side, maybe some rollback of the rollback on the regulatory side. And so, there's no doubt, but there will be a lot of stuff going on in the Financial Services Committee in the House and the Banking Committee in the Senate.
Great. These are great answers. So shifting gears a little bit and looking at corporate governance, it's been a big year for corporate governance, and I know this is a question top of mind for our clients, and just about stakeholder capitalism. We've seen the Business Roundtable this past year and their new definition of corporate purpose. ESG assets have surpassed $1 trillion. And we've also seen numerous rulemaking changes, particularly at the SEC. David, is corporate governance shaping up to be a hot topic in public policy, say in the next Congress in 2021?
Maybe not in the next Congress, although in the context of disclosures and racial equity and board makeup and oversight by the Congress on financial firms and others in terms of diversity, absolutely. On corporate governance, there's a clearer agenda on the environmental and sustainability side and disclosures there than there is on the E has more of a fertile ground because there's more of a track record of built up proposals. On governance, I think we kind of know what the agenda would be. Also, I don't think it will go as far as Elizabeth Warren's Accountable Capitalism Act and some of the ideas there, which have not been embraced even in the Biden-Sanders agenda.
Right.
The S part is the hardest part to figure out in the ESG equation.
Yeah.
Well, one of the proposals that the Biden team has made is to use federal government's work with asset managers to try to drive some of this agenda.
Yeah. Any thoughts, Paul? Any thoughts?
Yeah, I mean, so I think that, we were talking a little bit earlier about the prospect of President Biden winning and how, at SEC chair, there might be more pressure to appoint someone who's more progressive. So, I mean, that could be pretty interesting because historically, at least recently, a lot of the SEC chairs have been, more moderate, more industry friendly. And so it could be interesting if you have sort of a different power center there. Because I mean, climate change and racial equity is presumably going to run through basically everything that Democrats do if they take control. It's gonna, I mentioned housing earlier. We were talking about the SEC. I think that's going to be a theme in what they focus on. In terms of legislation, I don't know whether corporate governance has really percolated enough.
Right.
I mean, I think that it seems like a lane that would work for President Biden, since he has sort of carved out this, like, I'm not a socialist type lane. It could make sense for him to look more into those types of disclosures. But, I think that in order for legislation to happen, I mean, unless the Democrats really have a strong majority, of course, we haven't talked about whether or not the filibuster is going to go away or not.
Right.
But usually for big legislation to happen, it has to have a lot of, like I said, percolating time.
Yeah.
And I don't necessarily know that has happened as much, but I definitely think it will be in the conversation. And I think on the committee side, Maxine Waters has really focused on, board diversity and things like that. So I think that will be sort of an oversight focus, but the regulatory agencies would be where any action would come, if any, probably.
Okay, great.
Yeah, I might just add also that on the legislative side, we could actually maybe see a scenario where one bill addressing board diversity gets over the goal line this year. Congressman Greg Meeks has championed a bill that passed the House overwhelmingly, and that may actually find its way to enactment in a lame duck. I mean, you know, crazier things have happened, but this would bring some transparency to board directors at companies that are overseen by SEC. So that's certainly plausible, and it would be, I mean, frankly, it would be something that would be low-hanging fruit. I would imagine that could get done. If it doesn't get done this year, it will next year. But this is a place where if Biden is elected and there's a Republican Senate, one of the areas that I think will be ESG is going to be an area where I think he looks to leverage a strategy that the Obama-Biden administration did in 2011. And that's the sort of we can't wait approach. Right. And in the fall of 2011, you saw the White House advance a few initiatives through executive orders, through recess appointments. I think that's when Cordray was appointed, but also by getting companies to take on changes to their operations, their workforce themselves, either through the promise of some public accolades or behind the scenes pressure that translates into potential acknowledgement in a not so positive way. And for example, you saw a number of different banks announced in the fall of 2011 with Vice President Biden that they would increase their small business lending. These were large banks, regional banks, and they've sort of forecasted 3 years out, you know, we're going to go ahead and do this. And that was something that the White House initiated with some of the key financial services players and trade associations. And it didn't take, it wasn't legislation, it wasn't regulatory, it was basically, hey, you all need to you all need to do this work and take this seriously. And so, you know, certainly in the climate space, certainly in the diversity and inclusion space, workforce issues, if Biden does not have a Democratic Senate, or even if he does and wants to just show action, you know, if we're looking at next year and we see the, you know, sort of the transition, then the first 100 days, and we'll get into sort of the period of time after Labor Day, I would not be surprised if early on Biden goes to this sort of we can't wait part 2 playbook as a way to get companies to take some steps to change things on their own without necessarily having to get things through a regulatory or legislative process.
One quick point to add to Paul, you know, the Meeks legislation is an example of where the business community came to the table. We work with Congressman Meeks. It's a disclosure-based approach that we think is also responsive to investors that could actually drive real change on boards without creating one-size-fits-all hard mandates, right? Mm-hmm. So we're hoping that gets done. It's one of 13 bills that we hope could get done in the racial equity space this fall, and where we've actually announced we will score on that as our scorecard any votes on that legislation. So I think the divide, and it also shows a good dividing line between disclosure-based approaches, investor responsive-based approaches, as opposed to mandates. And that's where the battle lines end up being drawn, is on mandates. You know, one of the truisms, I think, is that you know, Republicans tend to do oversight over government because of their philosophical worldview. And Democrats tend to do more oversight of business because of that view. That's a generalization. But you could imagine Senator Warren, if she has a gavel on the subcommittee of banking, using her oversight capacity pretty vigorously.
Great. This is fantastic answers. So moving over a little bit, looking at fintech companies and banks. Past year, Square and Nelnet recently acquired ILC charters from the FDIC. Just last month, American Express acquired the lending company Cabbage. And we've seen your bigger tech companies like your Googles and your Facebooks of the world playing more in the financial services space. What do you all, pose this to all of you, what do you see Washington doing to address banks' needs and concerns while simultaneously addressing the ever-growing presence of fintech companies? Anyone want to take a first stab at it?
Well, I'll go. I guess I'll start by saying this is a complicated policy area, because in some cases there aren't necessarily immediate reforms that come to mind as a way to achieve some outcome. Having said that, there's no doubt there's also the potential for legislating by anecdote, as I mentioned before. And I think Facebook's Libra situation shows how, to the degree there's a business idea that, for lack of a better term, touches the stove, right. That there are policymakers that are ready to, on the Democratic and Republican side, ready to say, wait a minute, time out. And what we saw after the Libra rollout was a couple of appearances in front of the Financial Services Committee by Facebook that were then followed by legislation that was introduced that would break up big tech. And these were, right. These were somewhat clumsily written bills that basically said something to the effect of financial services firms can't have affiliation with tech companies or something right. like that, which is recognizing that was not going to be the final version of that bill, but it suggests that where there might be some broad, very complicated business enterprises that relate to lending in particular, the overlay with, okay, well, if you don't like that idea, how do you fix it and change it? And I think you either go the legislative route, which is less likely, or more so the regulatory route. And that's where you get, a lot of different regulators who at some point have to come together and organize themselves to figure out, okay, what do we want to do here? Whether it's a CRA modernization that might sweep in some of those potential lending, non-lending entities, implications for lending and non-lending institutions, or whether it's the FSOC itself, the Financial Stability Oversight Council that was created by Dodd-Frank, that frankly under Obama and Trump has not necessarily really functioned as a coordinating kind of referee type role. But it's certainly the case that I think if Biden becomes president, I would imagine an opportunity for any Treasury Secretary, Treasury chairs the FSOC, could, whether it's because of CRA, Modernization Community Reinvestment Act, or some fintech decisions, that folks feel need to be made, or just the overall conversation around cryptocurrencies, what to do there. You could see that if there's a Secretary of the Treasury who, while they're not tending to COVID issues, racial justice, the looming debt ceiling raise, right. If they wanted to take on some of these fintech issues, they could leverage the FSOC as a sort of convening body to have some of these complicated discussions in a way that it really hasn't been used before.
Great.
Yeah,
David? Go ahead, Victoria.
Sorry, I was just going to say, I definitely think that fintech is something that, at least on the regulatory side, that policymakers are going to have to continue to address. I think that the world is evolving far too quickly for them to put a lot of these issues on the sidelines. I mean, it's interesting because Acting Comptroller Brian Brooks, who just came in to office at the end of May, has already been putting out a bunch of fintech and crypto stuff. And so, whether or not he stays in that role, I think that also kind of has created the impetus and momentum for some of these issues to be on the table for whoever's in that job. I think that a big question around the fintech bank question is, the ongoing litigation between the Office of the Comptroller of the Currency and New York about whether national bank charters can be given to institutions that don't take deposits, and that litigation will, I think, be really important to certainty on how some of these questions are going to be solved going forward. But in the meantime, we're seeing some fintechs actually just become full service banks.
Right.
So, you could see that trend continue. There's also a whole bunch of, consumer finance issues that the CFPB has been sort of looking at dealing with. The bank regulators have talked about too, in terms of, having, how do you underwrite loans with, beyond just standard types of data, because a lot of credit reporting data isn't necessarily available for lower income people. And so if you find different ways of underwriting them, you might be able to increase access to credit, making sure that AI doesn't discriminate accidentally against, certain groups that's definitely a concern. And you know, I think all of these questions are important to Congress, and they're not necessarily partisan. But I think that they'll probably continue to play sort of more of an oversight role, because again, you know, I was talking earlier about percolation. I don't know that you know, that the things are necessarily really solidified on the fintech front in Congress in terms of you know, whether people are suspicious. And the last point I'll make is, you know, I do think that the Facebook Libra point is sort of looming over all of this, because it sort of indicates that, you know, even though people want financial innovation, they're also nervous about what is big tech doing, and, you know, are they going to completely upend, you know, anti-money laundering and all of these other things. So ton of really interesting questions there.
Great. So speaking of COVID and things moving fast, if you look back on 2020, it's definitely been a perfect storm for a lot of things: COVID-19 pandemic, social and civil unrest, and an uncertain economic climate. And I think this has kind of pulled back a lid on exposing the numerous disparities and inequities that Black Americans face in this country. Victoria, you touched on this a little bit in your article with Federal Reserve, and the wealth gap between Black families and white families. And then just last week, Citigroup released a study pretty much saying racial inequality, racism, discrimination has cost the U.S. economy $16 trillion over the past 2 decades. And I'll pose this question to all of you guys. How can Congress or financial regulators or an administration address the issue of equity and economic inclusion and mobility? And are there mechanisms in place for, say, overall the federal government to hold corporations accountable for addressing and improving on these inequities?
It's a big question.
But it's top of mind of like a lot of our clients as well. So
yeah, well, so there's sort of 2 aspects to it, right? There's diversity and inclusion in terms of who's at the companies, and then there's diversity and inclusion in terms of what they're doing, in terms of who they're serving. You know, on the regulatory side, I think Paul mentioned briefly earlier that the Community Reinvestment Act will probably be a big focus early on. You know, the OCC put out their own version of CRA, which has faced a lot of skepticism and a lot of, you know, opposition from Democrats, skepticism even from banks, and then the Fed and the FDIC haven't done anything. So, you know, there's sort of this disparate regime now where some banks face one and some banks face the other. So, you know, tie that in with the fact that racial equity is a central piece. I think that you know, reforming that will be a priority, and Lil Brainerd, you know, put out a vision for that from the Fed recently. So I think that's one thing that you'll see be a focus early on. You know, I think enforcement, if the Democrats, you know, take over, I think that enforcement is going to be a really big focus, particularly at the CFPB, and that's, you know, there's fair lending laws, anti-discrimination laws. So that's the easiest way to do that. You know, I think both Republicans and Democrats also come at this issue through the question of access to credit, and whether, you know, low-income people and minorities have access to credit. You know, that also gets into the question of you know, whether poor people are making enough money so that they don't need to go to, say, a payday lender. But you could also see a fight to you know, potentially cap interest rates on payday loans from the Democrats. So yeah, I think that these there's a lot of different ways that you can come at this question, and I think all of those different things I just talked about will be in the conversation.
The Biden-Sanders document references 2 specific areas. One is the one Victoria mentioned, which is enforcement of discriminatory lending. And the other is creating a public credit reporting agency within the CFPB. We put a lot of thought in it, in part because our members are putting a lot of thought into how do you really address the Black wealth gap, and how do you address the challenge of Black-owned enterprises who are particularly hurt in this crisis, as all small businesses are, but particularly Black-owned enterprises. We think there's some obvious answers, strengthening minority lending institutions, and we'll probably need to find some additional answers. On the fair lending side, we don't think the answer is just enforcement or creating a federal credit reporting agency, but we do need to find additional ways to build credit ladders for disadvantaged Americans, particularly Blacks across the nation, and finding ways to use other measures, accelerating the effort to bring other things into the credit score that might help move people up the credit ladder, while also thinking about how do you more effectively get a $400 loan to a consumer who needs an emergency loan, right? We've never really created an effective answer to that. We've made it hard to find good answers within the banking system, and it'd be smart to look at ways to do that.
It's great.
Yeah, I guess I would just add that fundamentally, so much of this comes down to who is in the room. Mm-hmm. And Victoria talked about the Community Reinvestment Act and the coordination among the Fed, FDIC, and the OCC. Well, I think it bears mentioning that, at least as I'm aware of it at the principal level, there are no people of color in the room on these discussions, certainly at the principal level at those agencies. And look, this is not just a failing of the Trump administration in terms of having diverse voices at the table in those senior economic roles. The Obama administration wasn't much better. With a few exceptions, there were very few African Americans, Latinos in senior roles at the Treasury Department, at the Fed, at the FDIC, the OCC, Council of Economic Advisors, National Economic Council, going back to the alphabet soup of acronyms that we mentioned earlier on. And I bring it back to there because it matters who is in the room to raise and lift up different issues, not just so that we actually get policy discussions happening that is the domain of the government, but also because that has an impact on the companies that they supervise. And the reality is that there is an ability that is unseen and undetected, but I know, having worked 12 and a half years at Citigroup, regulators can affect the behavior of their companies that they oversee, whether it has to do with the amount of capital they should hold, certain enforcement actions, obviously, but frankly, day to day, there are regulators that are sitting with bank executives making decisions as granular, in some cases, as we saw during the crisis, like, what blinds should you hang on this window or that? That's exaggeration. Right. But my point is, there's a way to change behavior in the private sector through the regulators. It happens every day as we know it. And I believe firmly that if there were more people of color in senior roles and on the exam teams and on down, there would be conversations, for example, around diversity at some of these companies. And certainly not just in the sort of ESG space, but there's no doubt that there's a way to socialize some of these ideas that we're talking about and bring them into reality on the operations side with companies, simply by having people in the room who bring, based on their own life experience, a view that might be different from someone else. I don't think it's a surprise that Citigroup last week, when they put out their report, commend their leadership. Mike Corbat, who's the outgoing CEO there, but he groomed the current CFO, Mark Mason, who's been there a year and a half, who's the only Black CFO of leading Wall Street firms. He intentionally groomed Mark in that role. Mark's a longtime Citi employee. But when you see the leadership in putting out that kind of a statement, and the combination of Mark Mason and Ray McGuire serving as vice chairman there, both African Americans, it's not a surprise to me that we see that kind of a statement coming out when you're intentional about cultivating diverse leadership and giving them a platform to do, in the case of this company, what they felt was good business sense, shining a light on how this gap translates into poor economic growth in some cases. And so I come back to the people side of it, because I think there's no doubt that that's the cross-cutting thread through all of these topics.
Great. Thank you, guys. Those are fantastic answers. Just a quick question from the audience, kind of back to ESG. Would either administration take further measures to enforce non-financial reporting, for example, stakeholder capitalism and conversion from the conversations from the business roundtable? Does that make sense? I can reread it again.
Yeah, well, to the degree that it's material, of course, you're already required to disclose it. And clearly an SEC on a chair intent on focusing on that would look more carefully at all disclosures in that space. But I think a lot of this is really being driven by investor demand, and the frustration I hear from companies is not whether they should disclose more on non-financial measures, but more that ratings agencies in the space and the requests are, conflict with each other, right? So finding a way to really be responsive to your investor voice, companies are leaning in here, but it's hard when one rater in this space gives you an F for doing something, the other one gives you an A, which shows you that it's really hard to create simple standards across the board. We're making great progress, but that's what frustrates companies. They're responding to their investors who want more information in this space, but it's not always clear the best way to do that.
Great. And then as we're wrapping up, we've got about 5 minutes, kind of a rapid response question, summing up everything we just pretty much talked about in the election. And there is a real world scenario where we can go to bed November 3rd, election night, and we do not have a presumptive winner, which could potentially lead to a a constitutional crisis if a winner is not declared. And given what we've discussed about financial services and capital markets and regulatory and outlook, what an undecided election, what would that mean for financial markets? And you all can answer one by one. Is it uncertainty? What are we looking at?
Yeah, well, I mean, I don't think any of us really knows. I think that it really depends on what it looks like, what the uncertainty looks like in terms of how much people are going to panic. Because, obviously in 2000, there was a considerable delay before we knew the outcome of the election. But people had, I guess, confidence that there would ultimately be a clear answer, whether or not they liked the answer. And so I think that when you get into questions of, how much, so let's assume that we don't know, that it's close and we don't know the answer, and that President Trump continues along this line of alleging fraud, right? Because that's been a common theme. That type of uncertainty, I think, depending on how vociferously he is talking like that, and in what manner, he's a bit hard to gauge in terms of how he's going to react. I think that will probably determine how freaked out markets are, because they're ultimately looking to the future, right? And so as long as they have some sort of confidence that this will be decided in a clean way, then they might be able to get through. But I really don't think that anybody has any idea what markets will do on any given day.
Nobody knows.
Yeah, and that's exactly right. I mean, I think there was the theory that if Trump were to win in 2016, the prospect of a Trump presidency would send markets into the tank. There would be fears. I mean, remember that was an expectation that would occur, and that didn't happen. We saw whatever you want to call it, the Trump bump or something, but it was a pretty aggressive next few months after that in terms of, so I'll just call that out as a reality. Second, look, from the period of time that we've been in this pandemic, I don't think anybody could have imagined that back at the end of March, when the wheels were coming off the economy, certainly if you told me that, within 6 months, the stock market would have regained everything it lost and been moving forward, generally speaking, I would have been surprised. So I think we don't know. I think that there's no doubt, though, that there is, I have to think that some in the markets are predicting some lack of certainty. But also are going to, what will start to become clear are some of the steps along the way in terms of the calendar that are going to begin to at least give a sense for, okay, what do we look for when? So January 6th, it's going to be a joint session of Congress to ratify the Electoral College. So let's back it up from there. about December 6th is the point at which, in order to have that ratification occur on January 6th, the states there are going to be requirements based on when they stop their counting of votes. And December 6th is generally around the point when if the vote counting is stopped, then it freezes at that moment. And certainly a scenario where perhaps, Trump could look to extend the count, or anyway, the point is you have an idea based on a few checkpoints about what to look for and what are the different sides trying to do based on the count. What is Trump trying to do? What is Biden trying to do related to the count up to those points? So, I think the fact of the matter is we're all going to get a lot more smart about things that we did not even imagine. 20 years ago, this time, we'd never heard of a hanging Chad.
Right.
and from the period of time from the 2000 election until December 12th, the hanging Chads became a thing. I don't know what the version of the hanging Chad's going to be this year. It's going to be out there. The market's going to have some reaction to it. My guess is we don't know what that is going to be. And then at some point we'll get back to normal, and we'll be sort of tracking that calendar, as it were.
Great.
Well, there's no point. The government could run out of money on December 14th unless they do another continuing resolution. So that could come in the middle of this period as well. And at least one, if not two, of the Senate races from Georgia probably will go to a runoff on January 5th. So you might not know the outcome of the Senate. So for those looking for some kind of a phase 4 stimulus, next steps to help those, that could all complicate the timing of that. We may not know who controls the Senate until January 5th.
Great. Wow. This has been great. These are great answers. Paul, Victoria, David, we are at time, but thank you so much for taking time out of your busy schedules to be a part of this conversation. Looking forward to working with you all in the near future, and just thanks for doing this again. Appreciate it.
Okay. Thanks for having us.
Thank you.
Take care.
Thank you.